Let me ask my guest, Florian Esterer from Swisscanto Asset Management. Florian, thank you very much indeed for joining us. First up,
good morning. Good morning.
What was your reaction to Obama's plan?
Well, I think the reaction we got over the last several months anyways, that the gloves are coming off. The bankers haven't really reveled in humility after being saved by the state. So I think this is an election year, and I think the need for regulation is there. So we'll see a lot more of these regulatory proposals.
How does it
come of it?
Yes, Florian, how does it compare to the old GlassSteagall Act here, and what are the differences?
I mean, the speech by Obama so far was a little lacking in detail, so it's kind of hard to tell. But I think the idea is really to differentiate the pieces that they think are the read as good pieces versus the economically sensible and pieces of the bank, the deposit taking and loan giving and so forth. So I think that's the general idea, but the details are lacking, of course.
Yeah, let me just ask you a question here. You know, this ban on proprietary trading by some of these banks here. The thing is, if this is not applied globally, it's going to be actually something which is simply not going to work, surely.
Yes, I mean, that's one of the issues, and that's why the Obama administration is trying to get the FSB and then the G20 aboard, and I think they've passed the proposal on. The FSB said, you know, this is something we've looked at before, and we think it's sort of sensible, so let's make up a proposal for the G20 May meeting. So we'll hear a lot more about it. But again, I think the details in it are very difficult. I mean, proprietary trading is one thing, but just in the normal course of market making in the fixed income markets, you've got to take a lot of positions just to facilitate the flow from your customers. Now, is that position taking, is that really proprietary? How much is proprietary? If you want to hedge the interest rate risk of the bank, is that proprietary? So, I mean, differentiating between the different pieces is very difficult, so that's why it comes down to details, really.
Florian, also just very quickly, what do you think the G7 is actually going to propose today? What's going to be top of the agenda, and do you think there's going to be any broad-based agreement, or will we just get a fudge?
Well, I think there won't be anything of substance coming out today. I think there'll be a broad-based agreement in that we need more regulation, that the Basel III proposals coming off the Bank for International Settlement are sensible, and we'll work on that, and we'll take a hard and serious look at the Obama proposal. And yes, and we'll have to think about compensation as well. But that's about it.
Florian, we're just going to bring in Dirk Becker. He's a senior banking analyst at Kepler Capital Markets in Frankfurt. Dirk, what do you make of all this, and do you think the G7 can realistically do anything?
Yeah, good morning. I think they probably need a lot of international coordination to come up with a solution. What we will probably see is not the US introducing rules and then imposing them on all others, but there will be a broad international coordination to prevent the next systemic crisis and to make sure that nothing like this will happen ever again. And I think the G7 will work in that direction. We have a couple of proposals now on the table. We have higher equity standards, probably coming up with Basel III. We have this Obama tax, which was proposed 2 weeks ago, and now we have these latest proposals. And I think around this we will see a new framework of regulation which will be internationally coordinated.
Dirk, very quickly as well, which banks are going to be hurt the most with the way things look right now?
Yeah, well, it's obviously going to be the investment banks. It's also going to be the stock exchanges. And we just have to see how deep the cuts will be, but it's going to be the capital market institutions.
Very quick question to Florian as well. Florian, you know, as an asset manager, where do you look now if you're going to invest amongst financials?
I think that, you know, I think there are two implications. One is shorter term, and I think Dirk is right in saying the noise will be very bad for a lot of the investment banks. So at this point, we actually prefer some of the more credit-driven banks where we think the sort of peak in credit loss expectations has passed, and those are coming in. So those look more attractive for us right now.
Florian, thanks a lot indeed. Florian Esterer there joining us from Switzerland, and also Dirk Becker joining us from Kepler there in Frankfurt as well.